Do you remember the first day of first driving lesson? I do. And I know how I felt. That was really stressful. I was very nervous. I thought that's not possible for me. It's so difficult. But after taking one lesson, two lesson, three lesson, then slowly, it became easy. And I still remember the day when I went for my driving test, and after the test, when the instructor told me, yes, I can declare you passed the test. The feelings, the happiness, the excitement I had, I still remember. That was one of the great day in my life. I'd done something really amazing. Well, think of anything you've done good in your life. The success never comes without hard work, without dedication. So do investing in share market. When you invest in share market, you put your money into a business, hoping that the business will do well, they will make profit, and business will grow. The value of the business will go up. So do the value of your share will go up, and you will have more money than you have invested. It is possible. It is very much possible, I would say. Key point is you have to have that passion, that understanding of the stock market. So before you understand the stock market, let's talk about what is stock. Stock is the little tiny portion of any company you invest. Let's say, for example, Apple has 5,000 share, and you bought one share of Apple, then you'll be one of 5,000th owner of Apple. In practical life, company like Apple will have millions of shares, but it doesn't really matter how millions they have. Still, when you buy a share, you are a owner of that company, and if company makes any profit, you are entitled for the profit. The total capital is being divided by the number of shares, so each share has the same value. So now we know what is share. Now, the second thing, you'd wonder, how many types of share? Yes, there's two types of share: common share and preferred share. The difference between common share and preferred share is the preferred share would have rights to the dividend first, and the common share would have the voting right. Voting right means the common shareholder, they will be able to join in AGM, and they can exercise the vote for every important decision company makes. That can be board selection, that can be any strategical decision, that can be any financial decision. So now I believe it's clear. Preferred share and common share, both are shares, but preferred share will have preference to the dividend, and common shareholder will have voting right. Dividend is a portion of the profit company make, and they distribute to the stockholder. Not every company give dividends. The company does not have any legal obligation to pay dividends, so dividend is not guaranteed. But most of the companies, most of the solid business, so to make the investor happy, they are willing to give dividends unless there is any difficult circumstance or any problem they may face. Things like pandemic happens every 10 to 20 years, and very reliable dividend paying companies had to cut their dividends due to very difficult situation raised by pandemic. If you think you are the owner of the business and you want profit, that's fair enough. But at the same time, the business has to survive for longer period for you to have continuous dividend. But things like pandemic, if company is struggling, then it will be sensible to cut the dividend for the short term to sustain the business. On the other hand, some company does not pay dividend at all. So now the question you would ask, if they don't pay dividend, why do I invest on their business? Yes, you invest in their business because those company tends to say, listen, we made profit, we are a good business, but the profit we made, rather than handing over to you, we're going to reinvest it into a project. And because they're already successful and they have a huge team and they has a good track record and they have a good technology and they have good advanced man, they know how to invest further, and there is more scope to grow their business. When their business grow, so does their valuation. When the valuation of the company grow higher, then so does your shares. So when your share price go high, obviously it values more than what you have invested. These companies are called growth companies. Now you may think, so which companies are growth companies? Which companies are dividend paying companies? In general, the technological companies are growth companies. For example, you can name Google, Facebook, Amazon, Apple. Apple, even though they pay little amount of dividend, dividend, but Facebook, Google, Amazon doesn't pay any dividend at all. But if you look into their share chart, their share price or their valuation of the company has gone hugely. So earning from the growth companies can be eye-pop than the dividend-paying company. Dividend-paying companies more of like they have solid business, they are making good money, but they have little opportunity to grow further. So to make the investor happy, they pay a reliable dividend every year. Which companies pays dividend? Utility companies, bank companies, and consumer staples companies are mainly pays dividend. So now we know what is share, how many types of stocks, and what is dividend. The next question must come in your mind: why companies sell stock? They sell stock to raise capital. Let's take it in a personal level. Let's say you have a business idea and you have a plan, but you don't have the money. So what would you do? Initially, you will try to convince your family, you'll try to convince your friends, and you'll try to finance the business and start the business. Now, after 6 months or a year, then you realize, wow, your business is doing really well and you want to take it to the next level. So when you want to take it to the next level, you would need a huge capital than what you had to invest initially. When you need now bigger capital, then who are you going to approach? There is two things you can do. Either you're going to bank or you can sell share. If you choose bank, what will happen? You'll be the full liable for the bank. The money bank will pay you, and obviously with the bank it comes with a huge interest as well. On the other hand, if you sell shares and you decided, you know what, let's not be greedy, I have a good business and I have experience and I know this business will do better, rather I will involve more people in my business and I'll sell my share to them, and if I make money, they will have a portion, I will have a portion too. So there will be less liability on you. You won't be held liable for the capital you raise. So this is much safer option for an innovator or for a business owner. Then when company decide, okay, they will sell shares to the people, then they go to stock exchange and they submit their business plan and they explain what they have done so far and what they want to do in future. Then set up a price for IPO. Now you learn another new term. What is IPO? IPO is initial price offer. So company decided, let's say they already invested this amount of money and they're aiming to raise this amount of money. So they add up together and divided by the amount of share they're willing to sell. Then they set up a price for the IPO. Once the business is registered with the stock exchange and the IPO becomes live on the stock exchange, then the public can trade the stocks on the market. When business is registered with the stock market, then it becomes to public limited company from private limited company. Now everyone can trade the stocks on the market. Initially, when company trades on the stock market, their price is determined by the people's opinion, but in long run, the price is determined by the business performance and operations. When come to that stage, analyze the business operation profit. Now all these business analytical tools comes to play. This is where the new investors start feeling nervous because they think, I don't have much knowledge of all these business terms and I don't really understand. There's nothing impossible for people can do. So do the stock market. You can invest in the stock market as long as you have willingness to learn and you have patience. I can tell you one very important thing. Because of advancement of technology, now everything is been prepared or has been made up for you. There is some paid platform where you will have all this prepared for you. You don't have to sit down with pen and paper and analyze the business. I can name one as Simply Wall Street. This is a very good app where if you want to research on any business, you just type the name and there is everything has been analyzed for you. So with little bit of knowledge of stock market, you can easily understand and it will be helpful for you to make decisions whether you want to invest on that business. Initially, I didn't have all this, but once I got to a stage, yes, now I can afford to pay for that subscription. I did pay and I use them and I think it's helpful. These are the tools help me and I am sharing with you, so I believe you can get the benefit. Thanks for watching my video. If you think it was worth watching and you wanted to see my next video, please make sure you do subscribe and gives me a thumbs up. That will inspire me to make more videos and you'll be the first one to see it first because it will straight away notify you when I will release my next video.